Sanjay Suri, Head of API Business, Mr. Ajay Sharma, Chief Financial Officer, and Mr. Vipul Kumar, Company Secretary. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I'm now glad to hand the conference over to Mr. Sushil Suri, Chairman and Managing Director of the company. Thank you, and over to you, sir.
Good afternoon, friends. This is Sushil Suri, CMD Morepen. I hope that all of you are comfortable, safe, and COVID is easing out. Hopefully, all of us are moving out a little bit. Please play safe. So quickly coming to the performance of the Q1 and of course some important developments. I would like to share that Q1 of FY22 was a very eventful quarter. Though we had lockdown, we had thrashing second wave hurting everybody, but we have many firsts in this quarter. So for the first time in the company, our revenue has gone up by 50%, 49 point some odd percent. So 59% growth in the total revenue, and this is on a base. Last year also we had 27% growth in the same quarter, and year as a whole we had 39% growth. So 50% growth in the revenue in the quarter. So that's a very phenomenal growth what we had. And certainly since our revenue is high, expenses we have been able to contain, and the EBITDA has also swollen 63% up year in EBITDA. And coming specifically to the numbers, 388 crores of net revenue and 45 crores of EBITDA against 27 crores last year. And for the first time, the company is now able to say that we have a huge profit and 97% increase in the profit before tax. The profit before tax of the company is 38 crores now, 38.53 crores. And we are going to pay tax for the first time now after a long time, almost after 25 years. So there is a provision for tax to the tune of 8 crores, and our profit after tax is 30 crores now, 30.47, which is up almost 57%, and correspondingly the EPS is also up. So on the whole, it was a very good quarter, and this is in the backdrop of high numbers in the last quarter, last year same quarter also. And the second development, the second highlight of the quarter is that during early this month and late last month, we have done a tie-up with RDIF, which is a Russian direct investment fund, for manufacturing of Sputnik in India. We have already started trial production. 6 batches are being sent to Gamaleya, Moscow for testing. And the moment we get approvals, we'll apply for the manufacturing license, and we hope to start the production, commercial production within 4 to 6 weeks. So this will be the fastest any company in country would be starting a commercial production. No doubt our technology transfer is a little different. And we have a capacity to produce up to 250 million doses per annum, and which can be increased up to 500 million doses per annum. So depending upon how much volume, how much bulk do we get, how much supplies do we get, so we can increase the capacity. We know that there's a lot of demand of Sputnik in India, but we are open for exports also depending on how RDIF directs us. So it's a very interesting development for the company that we are entering into basically biologicals. First entry, of course, is vaccines, and from vaccines we can go to other biological products, other monoclonal antibodies, and other biotechnology products, which is a good beginning for the biosimilars. World over, globally, if we see a talk of the top 100 products, more than 50 products are biological products. So it's a good entry into that. So the company is very focused and dedicated to keep investing in this in the future. So these are the two major developments. Coming to a little bit detail, of course, the presentation has been shared on the website and on the stock exchanges. But quickly speaking, at a consolidated level, last year we grew at 39%. And this quarter it is 50%. This is the highest ever growth in a quarter. 388 crores is the revenue. There are 4 business segments, as you all know, that there's the API business, then there's the medical devices business, then finished dosages, and the OTC. Finished dosages and API is under the Morepen label, and medical devices and OTC is under Dr. Morepen label. So segment-wise growth, if we look at it, 17% growth in API against a large growth in the last year same quarter. And diagnostic devices has really phenomenal growth, 189% growth. It's incredible that against a backdrop of 16% growth last year, same quarter, and from 46 crores to 134 crores. Of course, COVID second wave was contributing a trigger point for this. Then finished dosage has come up very clearly. There were last year, also same quarter, there was a lockdown and everything. So there was almost a washout, and we had only 30 crores of sales. So now it has come back around 30% up, which is very good. And Dr. Morepen as an OTC product also is coming back very clearly. Last year and this year comparatively, we have 172% growth in the total revenue. But minus the non-COVID revenue, including the COVID revenue, the company has grown by 9%. But if we take out the COVID products which we sold last year, sanitizers and masks and other products, disinfectants, because that's not a permanent business actually. So the company has grown 172%. All around the company has grown very well. But remarkable here is that diagnostic division has almost taken 11% share more from the API. Diagnostics has gone from 26% to 37%, 36.9% in this quarter, and API is 52%, and while finished dosage is 11% on a standalone basis. So in case you look at a macro picture, diagnostic devices is leading the race in this quarter, which is rightly so, because if we look at the numbers, we'll come back shortly. So it's going very well. API business as I shared has grown 17%. Last year it had grown 44%. In API, loratadine is a core product. It's grown 16%. Montelukast has grown by 45%. Atorvastatin has been a bit low, but new molecules have grown by 110%. New molecules again is more of diabetics. So the 2 new products in the diabetic which we had launched, those have grown by 110%. But if you look at the overall thing, so loratadine is anti-allergic, which has not grown much, but Montelukast is more related to, I would say, again, asthma. It was, again, a COVID symptom related to COVID symptoms also. Many people have been recommending Montelukast. So it is pre-COVID, post-COVID, during COVID, Montelukast has been consumed. It is still in short supply, great demand. Atorvastatin is a regular product which is going. Last year, same quarter, atorvastatin has grown very comfortably. So this year, there's not much growth. But interesting thing is the new molecules, the new diabetic drugs, which are going off patent and which we are selling the R&D quantities. So these new molecules are doing very well. Then coming to the main product basket of the medical devices, as I shared, that 189% growth against 71% growth last year. Last year, POC medical devices grew 71%, point of care medical devices. And here, if we look at the details, glucometer is leading the race in 233% growth in glucometers, glucometer strips. Then BP monitor 183%. Then nebulizers almost 700% growth. Oximeters, of course, were a small base last year, around 2,000% growth this year. But this is misleading because last year numbers were very small. But oximeters have had a very good growth in both months, April and May. So June is a bit quiet, but we are prepared that in case, God forbid, third wave comes, so a good sufficient supply of oximeter has been retained. And oxygen concentrator was a big issue in the month of April and May. So we are getting ourselves prepared to set up our own facilities for oxygen concentrator. So depending on, God forbid, if third wave comes, so we will be ready with oxygen concentrator, our own manufacturing also. So these are the major growth drivers for the medical devices. And of course, glucometer has been contributing very high, highest ever. BP monitor had been contributing. And glucometers, we have now 700 million strips already sold as per the calculation till date. And number of meters installed is 5.65 million. So the more higher base we have for the meters, the higher is the potential to launch more and more strips. Last year, this grew by 73% number of meters installed. And now this quarter number of meters is 176%. So quarter on quarter, if we say compared to last quarter, last year same quarter, the number of BP monitor installed is 187, number of glucometer installed is 176%. So there is an overall positivity in the market, both on BP and glucose. Rather, because of the lockdown, because of the COVID scare, more and more people are checking sugar and BP at home. More and more doctors are advising patients to check their BP and sugar at home. And rather, in certain cases, even post-COVID, people had a problem of sugar, higher sugar levels. So they have been recommended to check their sugar levels sitting at home. And similarly, with cardiac patients are checking their BP. So this has become I would say, essential commodity now that you need to have a BP monitor and glucometer at home. And of course, in the case of oximeters and nebulizers also were used during the COVID time. Oximeter has become a very essential thing these days. So on the whole, for this division, I would like to say that the market has basically fast-tracked its growth. So this growth was going to take 5 to 7 years, but because of COVID, people have realized the sensitivity of health and how much important is health. And more people are concerned about, I would say, self-health. That is what our aim of the company is. As we look forward, we are increasing our capacities of glucometer and BP monitor, and also getting into more and more new high-tech products and backward integration of the diagnostic devices. This is going to be a big business for us in the coming years. And now this business has become sizable, as during this quarter we have clocked 130 crore rupees of the sales. So now it's a reasonable size. So as the board has already decided to hive off this business into a separate subsidiary. So we have got approval from the board. We're going to start the process to go for NCLT approval. And there would be a demerger process, which will be basically unlocking the value of this division. And then company can separately invite investors and maybe go for IPO at appropriate stage. So that's the plan for this division. Finished dosage division, as I shared that it has come back, it has bounced back very nicely. It has grown by 30%, covering all the losses which we had last year, same quarter. Here also, of course, the effect of COVID is very clearly seen. We have seen growth of antibiotics, which is 179%, growth of vitamins, 91%, gastro products. There were a lot of people having gastro problems during the COVID. And of course, other products have also grown nicely. Then coming specifically to our Dr. Morepen, the OTC range. Here we have seen that during the quarter and during the COVID time, both time, more and more people have been focusing on OTC. More and more people have been focusing on the nutrition, immunity, vitamins, multivitamins, and now more and more people are going more towards Ayurveda and more towards immunity products than taking pills. Of course, pills are still required. So in case we take out the COVID products which we sold last year heavily, there's a growth of 172% in Dr. Morepen. And again, OTC contributes around to 59%. Grooming is again 275%, personal grooming. And another interesting thing which we have happened in this quarter, and we put a very aggressive effort, was on the online sales. Dr. Morepen has launched a full range of online products, which is only for the e-commerce. So total sale of 10% or 11% of Dr. Morepen sale has become online now. And for our personal grooming division, GUB, 33%, one-third of the sales is happening online. So that is the new, I would say, milestone which we have achieved. That company was earlier dependent only on regular routine distributors, but now more and more online traction is coming up. And online and e-commerce is the future which is going to happen. So we are proud to share we have launched almost 30 products which are exclusively for e-commerce. There is a green tea, immune tea, PCOC powders, and 3 types of collagens, personal food, sexual wellness products, and then the iron, zinc, quercetia, honey, vitamins, CoQ10, Giloy, omega-3, then the stress and sleep tablets, slim shake, then beetroot, and apple cider vinegar. So all these products are now available online, and the younger generation is buying more and more, and that is what is adding to the, I say, online e-commerce share of the company's products. I would just like to add and share with you one number that Dr. Morepen has a portfolio which includes our diagnostic devices and OTC and little bit of our common healthcare products. So Dr. Morepen has a portfolio was 500 crores last year, 504 crores. So, and of course now it is already in one quarter, it is 196 crores, it's almost 200 crores. So we can see that Dr. Morepen as a portfolio will be somewhere around 1,000 crores in the next 2 years' time. So now you can imagine a 1,000 crore portfolio sitting under the umbrella of Morepen. So at some stage, Dr. Morepen brand would also be hived off and maybe slipped into a separate company subsidiary. Dr. Morepen Limited is a separate subsidiary, but some of the brands are sitting in the main company. Some brands are in the OTC company. But Dr. Morepen as a company would also be at some stage go for its own IPO. But at 700, 800 crore top line now, and maybe 1,000 crore in next 1 year time. So Dr. Morepen itself is a $1 billion valuation product, which is sitting under the umbrella of Morepen Lab. So this also would be hived off separately because the total, I say, sum of the parts will be much bigger. That's in the brand value. And as we discussed that we are spending more and more efforts on devices and creating new products on the API. And of course, lots of efforts are going for finished products in the international market, ANDA. So we have processed and finished made dossier for 13 products of the new molecules which are expiring in 4 to 5 years. So we have prepared the complete ANDA. So 18% of our R&D is going toward ANDA and then devices, and then of course around 78% is spent on the API. So there's a 112% increase in the R&D spend in the quarter. And of course, last year same quarter there was a complete lockdown. There was not much spent, but with due regards, this year the R&D activity has been started in full swing. We have total 246 people, which include R&D, ARD, and all the quality control and testing people. So there's a big team which is working on this line. Coming to the financial highlights and ratios, we already talked that net revenue is up 50%, expenditure is up 48%. There is basically a 2% saving from the net revenue, which is adding directly to the expenses and EBITDA. So EBITDA has gone up by 63%, and interest, of course, is down 27%. We are a debt-free company technically, so only 29 lakh rupees interest was there last year and 21 lakh this year. This is primarily because of those small vehicle loans and other things. Otherwise, there is zero interest burden in the company. And the cash profit is up 64%, which is around 45 crores of cash in the company in a quarter. Profitability ratios have been slowly going up. EBITDA has gone up from 10.8 to 11.7%. There's a 90 basis point up on the EBITDA. Profit before tax has also gone up from 237 BPS, from 7.55 to 9.92% profit before tax. And profit after tax has also gone up by almost 0.12%, which is nominal. But major issue here is that we have given a provision for tax which is around 8 crores. If we remove the tax provisions, the profitability ratio is very high, but we are happy that now we are becoming a tax-paying company. Profit before tax 97%, then tax provision 8 crore, after tax 57%, and accordingly the EPS of the company has also gone up. The EPS of the company is gone up 57%. On a quarterly basis, the EPS is 0.68 rupees. So on an annualized basis, it will be like 2 rupees 40 paisa or 2 rupees 30 paisa, whatever, on a same calculation. So that's broadly the output. But going forward, if we see on the API side, our focus remains on the new molecules, and we already shared in our last quarter that we are working on a full basket of around 30 products, which constitute a part of the $40 billion market, which is expiring in the next 2 years. So, and of course, earlier we were talking only of the API plant. Now we want to have our ANDAs also for that. On the medical devices side, we are expanding the capacities of all the products, and plus also going for some new expansion, which you will hear soon. And on the finished dosage side, as we talked earlier, that all the new products for which we are filing ANDAs, those products will be coming to the Indian market also. We'll have some lead in the market. And Dr. Morepen OTC, so certainly we have launched more than 50 products in the trade and more than 30 products in the online e-commerce market also. So Dr. Morepen will be focusing more and more on the online market and will be reaching to the consumers directly as more and more possible. So we are all prepared and all set for the next year. The first quarter is very promising, and we are happy that this kind of growth continues. So we will be able to deliver much better results. So I think that's the basic commentary. And in case now if anybody has any questions, we can start taking the questions.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Ranveer Singh from Sunidhi Securities. Please go ahead.
Yeah, thanks for taking my question, and congratulations whole team for such a wonderful number. And I think since last communication, the company has shown a very rapid growth during past few quarters, and so you all deserve a big congratulations for this. Now coming to question, in Sputnik part, just I wanted to understand what kind of investment we are making and which facilities we'll be using to produce this.
Ranveer, thank you very much for understanding that company has been growing consistently, and of course the trend of growth has been continued for almost 7-8 quarters now. Thank you very much. On Sputnik, for the time being, we are doing only the fill and finish business, and we do not have much investments to begin with. But as our commitment and understanding with RDF is that they want us to produce the bulk also. So for bulk, we do not have facilities at our existing facilities. So we may put up additional facilities, which will be part of our biosimilar strategy going forward. But that may be 3 to 6 months away, depending upon how things pan up in the next 1 or 2 quarters, depending on the demand. So because 5-6 companies have already in the race for producing bulk. So for the timing, we do not anticipate huge investments, but the only thing what we'll be needing is a working capital, which as of today the plan is to have in-house funding only. But in case we need some working capital, so we will certainly be having our local arrangements, but no major investments.
Okay, so right now our agreement is for fill and finish products, right?
That is it, fill and finish.
Okay.
So because they need the product fast.
Yeah. So what kind of upside in terms of revenue or profitability, if you could give some indications of sense?
I would like to keep quiet for some more time till IDF gives us some numbers. But as we shared in the press release that we have a capacity to fill up to 250 million vials in a year, 250 million doses in a year. And depending upon how much volume do we get from them, and maybe all demand and supply of the global, I think that global demand is going to stay here. Earlier people are saying it's for 6 months, 1 year, but now people are clear that COVID is here to stay for another 5 years, 10 years, we don't know. So more and more vaccines will be required, and it all depends. But it will be very difficult to give the numbers till we sign any agreement with the numbers, because our technology transfer agreement has been signed. We are sending the samples to them. Once the samples are approved, only then a manufacturing licensing agreement will be signed. So what I would say, it will be premature to release any numbers to the market, because we are sending.
Okay, but our agreement is just a manufacturing agreement. We do not have distribution rights so far, right?
That's right. We are basically partners of RDF for manufacture. So in case of that is how all our other Indian counterparts are. But once the vaccine is produced, if they want to sell it in India, maybe Dr. Reddy has got some sort of exclusivity. We do not know what. But if they say, okay, you supply to Dr. Reddy, we will supply it to them. But if RDF asks us to supply to Government of India, we will supply it to Government of India. And in case they say, okay, you can market it on our own, so we are happy to do. We have been getting offers from many market players to even market that. But we are keeping ourselves tight that we are only representative of RDF.
Okay. Okay. And on tax rate, so now full tax has started coming in. So what would be the effective tax rate for a year, this on annualized basis?
Ajay ji, would you like to reply?
Yeah, this is Ajay. Tax rate would be around 20%.
So would be MAT rate?
Yes.
Not MAT. We are out of MAT. Now we are going with the composite rate,
Yes.
22%.
Okay.
So 22% less some carry forward or something, that's it.
There is carry for losses as well, so we'll get the benefit of that. Effective rate
Carry forward losses is completely exhausted, right?
Yes, this year.
Okay. And I missed a commentary on you spoke about API plant. So that new plant you were planning to set up. So I just missed that commentary.
Yeah, API plant is already, as in our last quarterly presentation we had given. So the plant is under approval and since beginning of construction stage, we got local clearances and we got the land transfer. Land transfer is still happened only this quarter. So we have prepared all the blueprints and on-site construction has started only on the building side, but it's going to take at least 1 year to complete the civil work.
Okay, so it will take 1 year. 1 year we can see commercial.
1 year for the civil work and 18 to 24 months for starting the commercial batches.
Okay.
But it will start in a phased manner. Not everything will take time. It will start in a phased manner.
Mm-hmm. And the last, if I can, this glucometer sales has tremendous this quarter. And I understand that second wave has actually given pushed many products to, from your company. So going forward, once that COVID related thing normalizes, so obviously demand will also normalize. In that case, we spoke about increasing capacity also. So how things are going to shape up in next 2-3 years, assuming that COVID things gets normalized and the COVID-induced demand is basically that demand goes away.
Yeah, I think that's a very valid and very practical question because everybody has this question that is this demand one time, is it temporary, is it over, just a temporary hype? But I would be happy to share that last year diagnostic division has grown 71%. It was looking at 71% is a one-time number. It will never happen again. But this year this quarter we have grown 189%. So it's 3 times than 71%. So basically, I would say the base has changed. More and more people are now using. Once you are checking your sugar every day, so like you get a habit, then you start doing it every day. Similarly, the BP monitor. I think the major thing which COVID has done is not that it is COVID and you should check your sugar. COVID has basically given an awareness that you should be alert about your health, care about your sugar level, care about your cardiac level, care about your obesity. So all these devices which people are not using at home and were scared of using at home, now more and more people are getting adapted. And to a large extent, more and more doctors are also advising that you should do a regular checkup. So there was a time that the doctors never wanted people to use these home devices, and even if you say that, oh, I have checked it at home, they will just laugh it off. Now they say you do the testing at home and send us a report every time. And you might have noticed that post-COVID, this telemedicine has also come up very heavily. And rather, this video consultation has come up heavily. During video consultation also, the doctor expects that you do your parameters on your own and tell me. So these things are not there at all. So basically, I would say the COVID period has only enhanced or I would say fast-tracked what is going to happen in next 10 years' time. Maybe it has happened. It was going to happen anyways. People were going to buy these. So we were always saying India is slow, the penetration is low. But COVID has forced us to adapt all these things. And you would remember during demonetization time, overnight, some players like Paytm had come up and they just there. But now there are 10 Paytms in the market and everybody has been absorbed. So similarly, in digital player, e-commerce, we are basically, we work better under pressure. So that's what has happened. So we have got a better access now and the lifestyle of people has changed. And to just give you another parallel example, that there was a time, and we talked earlier also, that Everybody was used to say that okay, it's important to have maybe a washing machine or a microwave or a refrigerator at home. So now those microwave refrigerator is fine, but you have to have a BP monitor and glucometer also at home, and maybe oximeter. And maybe at some places, people who are senior citizens at home, maybe they will like to keep even oxygen concentrator at home. So the average spend on the medical devices has increased. So people were spending hardly, I would say, 500,000 rupees on medical devices and testing. Now that budget has gone up to, I would say, average 5,000 to 6,000 rupees per household. So this is a permanent increase.
Okay. Thanks and all the best. That's it from my side.
Thank you.
Thank you. The next question is from the line of Hitesh Sancheti from Mania Finance. Please go ahead.
Yeah. Am I audible?
Yes, Hitesh.
Yes. First of all, congratulations on such good results. And my question was regarding the preferential allotment which you were planning to do last quarter, and we postponed it because we wanted to get a higher price. Of course, I appreciate that as a minority investor. But when is it? When are we planning to do that again? I mean, revise it again?
I think again, since it's a price-sensitive information, I won't give you a direct answer. But strategically, it is very clear that the investors were looking certainly were looking for a bargain deal. And fortunately for the company, the price level or the market level was very high. The company's performance was very good. And as our quarterly results are coming quarter after quarter, EPS number, EBITDA numbers are going up. So we could see that we don't want to undersell, and we want to watch the interest of all the shareholders, including minority shareholders. And we are concerned about wealth creation for all of us. All of us includes promoters also. That we should not sell cheap, and we could see that there's too much of dilution happening at a lower price. So we have been able to negotiate with them, and certainly they are working on the revised structure, and they have asked for a few more due diligence papers. So now it is for the board to decide when they come back that do we want to take up at these prices or future prices, depending on our own capital requirement also. And as we would see that we have sufficient cash flows in the company. So, and there seems to be no urgency to add capital, but we are keeping it open. And as and when the board decides there should be or should we not take fresh equity at these prices, we will take a call. But as of today, they are keen to invest.
As of today, we have the same investors keen to invest, right?
Yeah, they are certainly more than keen, because they always see that the market is getting stronger and stronger.
And even the promoters?
Of course, promoters again have to buy at the same price, because that's the SEBI formula.
Okay. Just one, what is the capex required in the next in this financial year?
Capex total requirement is 178 crore in the 3 years. So we'll be spending around 35 to 40 crores in the current year.
Okay, and this is all by internal accruals, or are we planning all by internal accruals?
As of today, the plan is same, but we are open to have some, I would say, typical term loan for building and other things in case there is a need, but so far so good.
And for the API?
Our working capital requirements are going high, so we are open. So we haven't signed anything as yet.
Okay. So for the API facility, do we require a higher capex at that time?
Of course, the capex requirement remains same, and since initially there will be only investment in the building part, and plant and machinery is going to take some time. We just need to give some ordering advances. So maybe there will be higher requirements in the next financial year.
Okay. Thank you so much.
Thank you, Hitesh. Thank you.
Thank you. The next question is from the line of Mohit Gupta, an individual investor. Please go ahead.
Yeah, hi, good afternoon, sir. Sir, I read environment clearance PDF on Morepen website. They mentioned the maximum expansion of existing API around 1200 TPA out of 2000 TPA. And in presentation, there is mentioned market goes down of old API in future. Sir, then what is the reason for maximum expansion of old APIs if market goes down of this particular API in future?
Yes, very very intelligent question, and I'd just like to clarify a very simple thing. Basically, whenever in API any new product is launched, the market goes high and high, but the moment patent expires, the value of the product goes down. So similarly, now we have product range. We have around 4-5 so-called old products, which for which market is fading. From $4 billion market will go to $2.89 billion market, because those are when the product demand will go down, the price goes down, rates go down, and new products come, so doctors start recommending the new products. So now the expansion what we are doing is not for the old products. The expansion we are doing for the new products. Of course, old products also, in case we need any capacity. For example, from China point of view, we are importing intermediate from China. So we may do a setup or a backward integration to make those intermediates at our own place. But primarily the function would be to set up the facilities for the new molecules for which we do not have capacity. If we divert our capacity of the old molecules into the new molecules, then we will lose the sale of the old molecules. So there has to be a very, I would say, fine balance. We continue the old products, we continue increasing it because that is our bread and butter. That will give you 70 to 80% sales or maybe up to 90% sales. Slowly, the new molecules will keep on adding and the old molecules stay where it is.
Okay, thank you.
Thanks a lot.
Thank you. The next question is from the line of Maitri Parekh from PI Square Investments. Please go ahead.
Yeah, hi sir. I have a question that what is the EBITDA margins for the segments like API, medical devices, and formulations and conducting organs?
We do not have separate EBITDA margins, unfortunately, with me now. But broadly speaking, the 11% margin is almost spread equally all over the place. But certainly there are lower margins in case of Dr. Morepen because there is initial ad spend and brand spending. But devices this quarter had been very nice, and API has been a bit low this quarter because there was a certain rise in the prices of the raw material from China. But in general, overall 11% EBITDA is what we are, I would say, inching more and more toward positive side. So there was a time that our margins are going low, and 10.8 to 11.7% in spite of little drop in the API EBITDA. But we see as a company as a whole, we are comfortable.
Okay, yeah. And like other formulations business that has been posting losses on EBITDA levels in the last year, right? So when do we see it coming on a break-even level?
Formulation is break-even even in this quarter, the branded formulation. And last year, because there was almost a complete washout, so we had to pay the salaries whether people are working or not. Doctors were not meeting, people are not so-called visit the doctors, so we had to keep the momentum up. Some people left us and some people we were forced to, I would say, keep. So the all said and done, last year was not a good year for finished dosages. So this year we are confident and comfortable. The first quarter had been very good.
Okay, sir. And my second question is on the CapEx that in the previous quarter, in the presentation, you had laid out a total CapEx spend of around 530 crores, right? Total of API, medical devices, formulations, and OTC. So this year, how much will you be spending in total? And if you could give a breakup, that would be really great.
I don't have ready figures with me, but like I shared that on the API, the investment will be between 35 to 40 crores, and on the medical devices will be around 20 crores. And this all will be from the internal crores.
Okay. Thank you. That was all from my side.
Thank you, Matthew. Thank you.
Thank you. The next question is from the line of R.D. Mirkute, an individual investor. Please go ahead. R.D. Mirkute, your line is unmuted. Please go ahead with your questions. As there is no response, we move to the next question from the line of Anupav Agarwal from Lucky Investment Advisors. Please go ahead.
Hello. Yeah, good afternoon, sir, and congratulations on great set of numbers. My question is, so we've seen a phenomenal growth on the top line and margin and that. My question is, given the prices we've been enjoying in the COVID products, what explains the drop in the gross margin from 37% to 30%?
What about the gross margin? I couldn't get the question. What's that?
What explains the drop in the gross margin from 33% last year to 30.5% in this quarter? Given that we would have enjoyed better pricing in the diagnostic businesses.
There's no drop. There's no drop in the margin. Do you see any drop?
On the gross margin, sir.
Ajay, would you like to respond? I don't see. I don't have any number. Basically, I think maybe you are reading the segment-wise breakup in the presentation. That is on the revenue sharing. The revenue share of diagnostic has gone up from 26 to 36. Gross margins.
The company level gross margin, raw material minus sales minus raw material, has gone down to 50 basis points.
That I share. I think Ajay, you can share about the API cost going up.
Yes, because in the API business, there was export business was not margin increase of export business. So we could not realize that much better margin from our export side. So whatever increase happened, it was on the account of the domestic business, wherein you don't have margin. So you have top line, but you don't drive that margin. So we are able to grow our top line with the API business. But at the same time, we couldn't drive that much margin. So that was the reason. So RMC pricing was a bit higher in the API business. Even in the diagnostic business, so we have not as such increased our margin. It's that we have able to sell the number of products more. So that is how on overall basis it has happened. Yeah.
So basically, if export API would have been at a normal level pre-COVID or during COVID, margin would have been higher.
Yes.
Understood.
So, as you would understand, export is at a higher price and to the regulated markets. So this is just a let's say one quarter impact. So maybe next quarter it will bounce back.
Yes, sir. Understood. So just a clarification, I missed your number of the next 3 years capex amount is how much?
178 crores for API, which is an approved project, and another 100 crores for the diagnostic devices.
Okay, understood. So just some timeline of basically hiving off our businesses, diagnostic business and the OTC business. Any color you would like to give as to at what level of sales would you be looking to hive off these companies, and what would be the timeline?
Look, on the medical devices, we are ready and the numbers are good. Last year we talked at 300-400 crores, so we are already at 134 crores for a quarter. Even if we talk, I would say this is a base, so we are ready and the board has already given us approval. Now it's a procedural matter. So we have to file an application with the NCLT and it takes 4 to 6 months time. So if everything goes on time before the close of the financial year or maybe Q1 of next year, it should be hived off. Diagnostic.
Okay, and about Dr.
Dr. Morepen may take another 1 or 2 years because it has to get a critical mass.
Right.
So the whole new range of products is being launched and we have to get a critical mass.
Understood. And that focus is driven by online sales, I believe.
Yeah, basically now the time has changed, the world has changed, so we can't keep pushing the old story now. So new story has come up and we are seeing a very good response. Very, very good response.
Understood. So last one, if I may, just on the formulation side, we are filing a healthy amount of ANDAs. Can you give some color as to what would be the size of these molecules average and whether we'll be able to garner 10-15% market share?
Look, the average market size of the products which we are anticipating, which we are planning, not planning what we have filed ANDA, is between $2 to $400 billion, which even when the market crashes by 70-80%, would be very comfortably around 40-50 billion. And we are expecting only 5 to 10%, like you read, not 10 to 15, I'd say 5 to 10% market share. And because there are earlier time there was something like a first to file and you're getting exclusivity. Now these days 10-15 people get together. So even if we get 2 to 5% share, our projections are good. So the projections what we had made last year between 2 to 5% only.
Right. And we have a field force for marketing the products, or how is it going to be distributed?
Certainly, we have our own office in US. Morepen, we have our own subsidiary. But closer to the date, we will be open to do the tie-ups with the marketing companies also.
Understood.
In case we feel that Morepen should have its own brand, we are open. But we have been approached by many people who would like to just get the marketing part. Maybe once we have our full portfolio of 1,500 products, at that time we can have our own marketing. But just for 5-6 products, I think it's too early to have our own infrastructure and costs. Very, very high cost to set up a market.
Thank you, and all the very best, sir.
Thank you. Thanks a lot.
Thank you. The next question is from the line of Hitesh Sancheti from Manya Finance. Please go ahead.
Yes, sir. Just a follow-up question about the new molecules. Which applications are we concentrating? Are we looking at any oncology molecules also?
No, Hitesh. Our focus primarily is on anti-diabetic and cardiac products, primarily. Or, of course, few products are neuropsychiatric. So that's like 60% of the market. But going forward, when we go towards biosimilars, so then certainly some oncology and some other monoclonal antibodies, those would come. But that's not part of the present plan. The API plan, the 13 doser is primarily the gliptins.
Okay.
Diabetics.
Okay. And just on a lighter note, suggestion. I heard you on CNBC Hours. And mentioning that on the gate there is a different pricing, and over the counter there is a different pricing. So is there a different pricing for shareholders also?
You're right. So I think the CNBC guy was saying that factory gate, he says will come to the gate. So and I would put up jokingly something else similarly. When you ask someone कि भाई रेट मेरे को इतना नहीं पड़ता, आदमी बोलता मेरे को इतने का तो घर पड़ता है, बोलता कोई बात नहीं घर आके ले जाऊंगा.
राइट है. अभी वही है ना, तो अभी हम फैमिली है, तो फैमिली के लिए क्या रेट होगा वो भी पूछ रहे हैं हम.
Please feel free anytime, so you can write, we'll give you a special discount.
Just as a general shareholder thing, do we have any structure? That's all I wanted to say.
We do not have naturally a formal structure.
No, not only for, I'm not asking for myself so far, but generally for a shareholder structure.
Yeah, we don't have any formal structure as of now, but it's a good suggestion, so we can always implement that. In case you write to company secretary, he'll be able to formulate some scheme. That's a good suggestion.
Yeah. Thank you so much.
Pleasure.
Thank you. The next question is from the line of Alisha Mavla from Envision Capital. Please go ahead.
Hi, sir. Good evening, and thank you for the opportunity. So firstly, I'd like to know what is your current capacity utilization for your API plant?
Anisha, as of today, we are use 80 to 90% between various products. We have different products when we substitute one product with another when we have spare capacities. But going forward, the more and more equipment we keep on adding, so we will be able to maintain the same capacity, but adding more and more production. But for different products, for example, Loratadine, Montelukast, we have dedicated facility, so we use it for almost 100%. Between Atorvastatin and some Fexofenadine, we switch the capacities, but 80 to 90% of the utilization.
Okay. So if I may ask for a clarification, since you're already at 80 to 90% and the new API capacity should take at least 24 months, will we be able to maintain our current level of growth of, we did 17% YOY growth. Do you think we'll be able to maintain this kind of growth?
Yes, Anisha, that's a smart thing, but how do we manage it? Basically, we keep on adding small little capex to balance the capacity. So we keep on adding additional reactors in the same machinery. We keep on adding balancing equipment, somewhere centrifuge, somewhere we add a dryer, somewhere we add a vacuum. So we keep on adding the capacity. and there's nothing like a fixed capacity. But when we are saying that the new plant is a new block, a new building will be made. But in the existing plant also we have a routine capex. So that routine we spend 10-15 crores every year to match the capacity of or demand of the products. But the new plant will be set up only say after a gap of almost 20-21 years. In 98 we have set up the old plants. Now we are setting up new blocks, new utilities, new generator, new cooling towers, and everything will be new and additional. So that will not only impact the existing capacity, that will be additional capacities. Does it answer your question, Aisha?
Yes, sir. Thank you. And so I'd also like to understand that the current run rate that we're seeing for both our API and formulations segments, do you think this is sustainable going forward, or do you expect it to at least taper slightly once the COVID tailwinds no longer exist?
I think that's where the whole so-called billion-dollar question is. We are all thinking that COVID is there and COVID is not there. So first of all, let's admit COVID is going to be here. We all have to get used to it. The only thing is that whether we have to change our lifestyle, whether one product goes or another product goes, so something or the other will keep on happening. And we have to, I would say, the medicine requirement or the health, focus on health will this comeback or recovery, I would say, even for example, last year in formulation and in Dr. Morepen, first two, they're coming back. It's not that there's extraordinary growth. They're just coming back because last year was a low number. So we don't see any major slip in the sales. Yes, in diagnostic devices, we could have thought. But diagnostic devices has proved quarter after quarter that in spite of 71% growth last year, so this is doing phenomenal growth this year. So we are seeing that there's a low base, and we are I would say, mid-sized company with small base. So we don't foresee that a growth of 20-30% would be difficult. Yes, we will not be giving you 100% growth every year.
Sir, I'm sorry to interrupt. You're breaking. Your voice is breaking in middle.
Yeah, I'm saying that 20-30% growth will be still very minimal what we can give. We are a small company with modest numbers. So it's not that we have to add up 1,000 crore every year. So numbers are small, and we are comfortable that 20-30% growth will be able to maintain.
Okay, sir. Thank you so much.
Thank you, Rishu.
Thank you. The next question is from the line of Abhishek Pera, a retail investor. Please go ahead.
Hello, Mr. Shuri.
Yes.
Can you hear me?
Yes, sir. Yeah.
First of all, a very lot of congratulations to you for excellent set of numbers. I have one question that is about the redeemable preferential shares. Do you have any plan, when do you plan to redeem them, or what is that you are going to do with it? If you could tell us.
Ajay, would you like to pick up this?
Yes. Yes. In fact, we have already talked to our lenders. So they are inclined to go for conversion into 3 years. So we during this 1 year, we will be converting this into the equity capital. So this last thing from the bank side will be taken care of this financial year. So there will be nothing left for the bank. The money, that part will be
So, Mr. Ajay, so the conversion rate, the issuance of the new preferential shares, so that will be as per the SEBI formula, right?
Yes, it is. That and for everybody.
Okay. Thank you.
Thank you.
Thank you, Abhishek. Thank you.
The next question is from the line of Ranveer Singh from Sunidhi Securities. Please go ahead.
Yeah, thanks for taking my question again. Just one thing, what is our cash position currently?
Cash position?
Yeah. How much cash currently we have in balance sheet?
We are lucky that we don't have to keep cash at our home, but we have fixed deposits around 35 crores, which we deposit in the bank and try to avail some financial facility against that because we don't have any other working capital facility. And we use all the cash to get so-called return OD facilities. And these days, with banks are RBI is pushing that you cannot open a current account. So that is the only way we can use the banking facility, that we give them a FDR and use the current account facilities. We do not have any other credit facilities.
Yes. Received any cash from the investor so far? Any upfront?
No, we have, because all that will be only after the EGM. We'll have to come back to you to take a shareholders approval, and only then.
Okay. And promoters funding earlier, what we made, that has already been consumed?
Promoter funding we had done only in March. We had got some 25% payment against the first lot of the promoters. That was Ajay, how much was the amount? 28 crores?
Well, 40 crores already received.
43 crores.
32, we received.
Yeah. So that was in March. Yeah, that utilization has come in the March.
Yes. Okay, sir. Okay. And would you like to give any guidance in terms of overall guidance, in terms of revenue we can expect in FY22 or profitability or profit?
Yes, we are always happy to share our feelings, but SEBI doesn't allow you to speak much. But in general, I would say we are at a happy, healthy position, and if everything goes well, so we'll be able to maintain the growth trend of at least 25-30%. If not 50%, but 25 to 30% growth we'll be able to maintain. And industry is doing very good. Our devices are doing good. API is good. And once we have all the investment plans in place, so the life will be much better. And so far, like you're seeing in diagnostic devices, the market has just unfolded heavily. Similarly, in API, we are just doing old molecules. When we go to the $40 billion market size, again the growth will be much higher. So the potential is huge, but I won't like to give any specific numbers.
Okay. Thanks a lot, sir. Thank you.
Thank you, Abhishek.
Thank you. That was the last question in queue. I now hand the conference over to Mr. Sushil Suri for closing comments.
Thank you, everybody. Thank you for appreciating your own company's performance. We value your participation and comments and look forward for